is Matt from InvestiQuant. Today is Tuesday, February 1, 2022. Today is the first trading day of February. So that's kind of a unique day, and that's something that we can easily look at here within Discover. So that's what we're going to do this morning is we're going to see what has happened historically on the first trading day of February. So I've selected all four instruments. The setup is based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. And for this study, we're going to keep it very simple. We're going to go to the calendar library, and we're going to say from the active today section, which is telling you what is true for today's trading session, is we are going to say that it is the first trading day of the month. I just clicked on that, and I'm going to come up here to February, and I'm going to say that it is the month of February. I've clicked on both of those. They have both been added to the test. You can see where they come from. Here's where February's at. Here is where the first trading day of the month is, and now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when it is the first trading day of February. So we've got 19 samples here dating back to 2003, and they are very similar stats for all of the instruments. The win rates are quite high. Again, just 19 samples, so it's not a huge sample size, but they are all in agreement, with the S&P being the strongest of the group, coming in at 84%. And that's telling you what percentage of these have closed above the opening print. For the NASDAQ, it's 74%. For the Dow, 74%. For the Russell, 79%. So quite high win rates there. And if we look at the average moves, average loss here larger than the average win for the S&P. That is not the case for the NASDAQ. For the Dow, the average loss is larger. For the Russell, the average loss is larger. Now, there's not a whole lot of losses in there, so one loss can pretty much skew that when it comes to average moves when you've got win rates that high and that few of samples, 19 samples, win rates well over 70% on those. So it's just a couple of losses that could skew the average win versus average loss. But let's see, we can scroll down. You can see the monthly chart. And you can see what it's looked like. Yeah, there's one big loss, which is likely skewing that number, at least in the S&P. But pretty consistent here over the years for the first trading day of February being a stronger day, historically speaking. So hopefully you found that helpful. Good luck today. We'll see you next time.